Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the euro currency. Yesterday it was a bit dramatic action, but usually it happens. It has happened because of the external driving factor, external impact, which was the CPI report, and so was the highest level of the consumer price index in the recent 13 years. That just crushed the dollar rivals, and euro in particular. You can see that sharp sell-off has started right from the report, and currently investors will be looking for testimony, the speech of the Jerome Powell in the Congress. That starts today. It's lasts for the two sessions, Wednesday and Thursday, and trying to catch any hints on possible early action from the Fed. My personal opinion is that, well, actually we stand very close to next Fed meeting. This will be on the next week. I suppose that hardly Jerome Powell will tell something really new to the Congress just a week before the next Fed meeting, just to not bring some chaos to the markets, because lots of additional information and some drastic conclusions could just trigger the chaotic price action on the markets, and Fed doesn't want it. That's why mostly I suppose that Jerome Powell will repeat the same thing that was said in the Fed minutes had been published. It probably will follow the same assessment of the overall situation, because if everybody already aimed on the announcement of the policy change as early as by the end of August in the September meeting, no need to hurry up and trying to bring the same information in July, and especially in the Congress speech. So although some chance exists that maybe Jerome Powell will say something new, but more probable that he will repeat the same thing that was said in the previous Fed statement. Meantime, anyway, the CPI report by itself is significant, and in general, as we said, the overall context and bearish. We actually were watching mostly for taking the short position here, but the recent price action on intraday charts was a bit too choppy and unclear, forming no patterns. Actually, it was made a bit difficult to catch to proper level and to consider early reversal that might happen on the market. Besides, 2 days ago, overall performance here was not bad actually. The market was trying to break wedge pattern, and that makes us think that indeed we could climb slightly higher, where we could consider some patterns. But the CPI report just crushed this short-term bullish context, and it seems that we have to watch for near standing levels to consider taking the short position rather than dreaming about some rally to the 120 area. Some chances exist that maybe situation changed because of the Jerome Powell speech, but we treat this as not very likely this will happen. So on the 4-time frame chart, a most conservative level and target that we could consider stands very close to the market. Actually, this is 1750 area, as we said. It might be some kind of free drive pattern. Theoretical market could reach. Potentially, free drive target stands the top between the second and third drive, and theoretically market has to climb here and taken out of this area. But this is only theoretically. What will happen in reality is difficult to say. But anyway, as you can see, crossing of the extensions are very accurate here. Second drive stands 127 to the first. Third will be in the crossing of the 127 from the second and 1618 from the first. This is classical combination of the extensions, and the market here keeps it very, very well. So this is nearest standing target to the downside that market could achieve in the nearest time. On the hourly chart, meantime, maybe on the background of the Jerome Powell statement or something, we could consider some resistance levels. And the first one that looks interesting is 1810. This conference resistance on the hourly chart, and maybe right from this area, market could start downside continuation. Because recent action, guys, on the daily chart is this tail closing and sharp reversal. Here's, by the way, we've got some fake breakout of the wedge pattern. It suggests that market could start moving directly to the OP target, which is 1620. So here was an attempt to show the pullback, but this attempt has failed and market collapsed. And take a look at the price behavior below these lows. Market doesn't show a fast and sharp return right back up. So it stands below them. It's very gradual type of action. So it seems that some retracement is possible, but overall situation looks like the market stands on the way to the downside target, to the continuation to the OP. That's what we could see from the overall price behavior that we have in the market. At least currently, well, it's difficult to consider taking any long position. Of course, you could try and consider free drive with the placing very tight stop right below this area. But at some degree, this will be the bet on the Jerome Powell speech, that he will say something dovish and to calm down overall market society and the Congress, and so everything stands under control. Inflation is not as awful as it seems, and so on. So in this case, indeed, maybe some pullback we will get. But personally, I'm more looking for some maybe deeper retracement to this level and consider ability to take the short position. So maybe not this week. If we will be in time, maybe we'll try to do this week, but more probably this will happen next week. Currently, we need to see what the retracement and reaction here will be. So that's our view on the euro.